Hey everyone, in this video I'm going to highlight one Warren Buffett growth stock that investors can buy now in December. Of course, Warren Buffett is a legendary investor with legendary performance over decades. And it's not just that Warren Buffett's portfolio performance has been excellent, it's that the strategy that he uses in finding stocks that have a competitive advantage with demonstrated success and buying them at reasonable valuations is a strategy that makes sense, that investors can understand, that is not based on a fortunate few stock picks that exploded in value and now that's puffing up the portfolio results. And so for that reason, Warren Buffett gets a lot of respect in the investor community, and it's understandable that investors look to Warren Buffett's portfolio to find stocks that they can add to their own portfolios. So without further ado, let's take a look at what that one unstoppable Warren Buffett growth stock is.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the Warren Buffett growth stock that I'm talking about, that I'm recommending right now for December, is New Holdings. New Holdings is a relatively small position in Warren Buffett's portfolio at just 0.25% of weighting in the portfolio, but it wouldn't surprise me if over time this becomes a larger holding in Warren Buffett's portfolio, especially if the company continues to deliver the phenomenal performance that it has been delivering thus far. Already in 2023, New Holdings stock price is up 104% for the year. Now, I have been recommending New Holdings stock all year long, and even now I'm recommending it still, even though it's up 104%, because the stock price isn't just up for no reason. The company has delivered performance that justifies a rising stock price. Sometimes I will share with you stocks that have increased in price, but they haven't performed to justify that increase. The stock price is increasing because of momentum, because of hype, because some popular influencer has recommended it, or for other reasons, but not justified by performance increases in revenue, in profit, in cash flow, or competitive advantage. So this is not the case with New Holdings. Let me show you what they've done just in the most recent quarter. So New Holding just in the most recent quarter added 5.4 million customers and 18.7 million year over year. They now have 89.1 million customers, reinforcing its position as one of the largest and fastest growing digital financial services platforms worldwide. But not only have they achieved that growth in customer count, which a lot of companies can achieve growth in customer accounts, but at the same time lose a lot of money as they spend to acquire customers. That hasn't been the case for New Holding. New Holding reported a profit of 303 million in the quarter compared to 7.8 million in the third quarter of 2022. So they're not only increasing customers, but they're increasing customers profitably. They're increasing revenue profitably. And that's what undoubtedly has attracted Warren Buffett to this growth stock. Is they're not just spending money ferociously for customer acquisition, leading to massive losses on the bottom line, and then promoting themselves to investors and saying, look how fast we're growing, look how many customers we have, when, yeah, but you're losing so much money on the bottom line. That hasn't been the case for New. They're growing responsibly, profitably. Deposits also increased by 26% to 19.1 billion. For a financial services company, deposits are important because that's money the company can use to lend and earn a margin between what it pays its customers and what it charges borrowers. That's called the net interest margin, and it's a key for many financial services company, for many banks, and it determines how well they're running the business. Speaking of the net interest margin and the risk-adjusted net interest margin, continue growing for new, and it reached an all-time high of 18.8% and 9% respectively. That means the difference between what new is paying its customers and what it's charging borrowers is nearly 20%. It's 18.8%, and that spread continues to rise. And if you adjust that figure for risk, it's at 9%. So a healthy margin between what new is paying people to deposit money at the bank and what it's charging borrowers. And that's a nice spread that continues to deliver nice profitability for the company, meaning as deposits increase, it's going to continue to earn that spread and continue to expand profitability, which is a nice formula and one that is good for new stock investors. Looking at the company longer term, if you look at the trailing 12-month revenue, you can see phenomenal growth here from new from June of 2021, where trailing 12-month revenue was around 750 million. That's grown all the way up to 4.9 billion in the most recently updated trailing 12-month period. So the company is delivering excellent top-line growth, and with a company that's also delivering profitability and demonstrating nice margins, revenue growth is that much more important, because you know that each incremental dollar in revenue is leading to a nice boost in profitability. That's not the case for money-losing companies. For companies that are losing a lot of money on the bottom line, I sometimes wish they would slow down and not grow revenue as quickly, because with each dollar in revenue, they're just losing more money on the bottom line. That's not the case here, so you want new to increase revenue because it's delivering the revenue growth profitably. Speaking of profitability, net income in the trailing 12 months has been increasing nicely up to 372 million. This comes after the company had consistently been generating losses and grew to a level where now at this scale they can demonstrate profitability on the bottom line at this level. Now, it's not guaranteed that the company will continue delivering profitability going forward. It's just recently starting to expand and explode the profitability. I showed you that huge boost in profitability in the most recent quarter. And so there is a little bit of risk here with new, in terms of it's not delivered this kind of result for a very long time. It hasn't done this for a very long time. It's demonstrating that it's on the right path, that it's going in the right direction, and every quarter it continues to improve all of the key metrics. But it's still not that much history in delivering that kind of performance. So it's not like you can say, well, they've done this for decades, and I can feel confident that they're going to continue to do this for decades more. That's not the case for new, and that's a risk for investors looking to add new stock to their portfolios. Still, considering their phenomenal growth in revenue, in customer, in margins, in profitability, and the fact that they're trading at a forward price to earnings of just 20.81, I think the risk versus reward is in investors' favor with this growth stock, with this Warren Buffett growth stock. For those reasons, I think new holdings is one growth stock that investors can add to their portfolios in December. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.